All right. Welcome once again to another episode of Liquidity in the Markets. I'm your host, Saeed Hussein, and joining me today is my esteemed guest, Ilich Martinez. I pronounced that right? Martinez?
Better than right.
Ilich Martinez, founder and CEO of Camino Ventures. Ilich, welcome to the podcast.
Thanks, Saeed. Happy to be here. Thanks for having me.
Of course. So, Ilich, you have a very, very fascinating background. You and I go back to at least how long? Almost a decade? Yeah, just about.
I would say over a decade.
Wow. So we go back to our Wall Street days. Why don't you start off by providing some of the folks that are on here a bit about your background, growing up in the mean streets of the hood. You and I always talk about that, and and then I guess shifting from the mean streets to Wall Street, and how you came up on your career. I think that would be a great start.
Yeah, so I come from, as people would say, humble beginnings. I moved to the United States from Dominican Republic back when I was just 11 years old. Grew up in Queens, New York, the streets of Queens. Just like any other kid, going to school, going back home, doing my homework, grabbing my basketball, and then going to play some street ball. And I spent my years doing that. At some point during high school, I decided that I was going to be a dentist. I wanted to be like my uncles. My dad is a medical doctor, so he was a little disappointed that I had chosen my uncle's professions over his, which made things a little interesting. If you fast forward to me, my freshman year of college, I ended up quickly changing my mind and choosing technology. I was at my uncle's house and I was watching him write some code, and I asked him, "Hey, Uncle Franklin, what is that?" And he basically mentioned, "Hey, Ilich, this is a program."
This was your uncle, the dentist, who was writing code?
This is another. This is
different. Uncle.
That would be fascinating. That would be an interesting.
I'm like mind blown. What?
That would actually take the podcast in a whole different, fascinating level. Well, this was my youngest uncle, Franklin, who at the time was wrapping up his college, degree, his college time, and he was actually writing one of his final computer programs. And I asked him, "Hey, how does this work? How do you develop software?" And he kind of walked me through it and said, "Wow, that's what I want to do for a living." So I ended up majoring in computer science. And I still recall my computer science 101 class having 181 students. And then there were 35 of us taking the final. So it was at a time in the mid to late 90s when kind of everybody wanted to be in technology because that was the future. But not everyone could survive what it required to be in technology. So ended up going through getting my computer science degree. My first job out of college was in Wall Street, doing work, writing code for traders in a wealth management company in Wall Street. And my first job was basically automating a lot of the manual tasks that traders had in the company. So spent about a couple of years just looking around the firm, looking at ways of optimizing their manual processes. Ended up writing a lot of the batch jobs that ran overnight, that did all the trading calculations. As part of that, I was on call, 24 hours a day, 365 days a year. So that was a challenge at an age where I wanted to be out, hanging out with my friends in my young 20s. But in the long run, it kind of paid off because my career turned out pretty good, right? So I stayed in that company for a number of years, moved up the ranks. That company, Neuberger Berman, Saeed, that's where I met you. Moved up the ranks and ended up running.
Or rather, I met you. You're the one that hired me.
That's right. Those were some fun times. So ended up taking on some interesting jobs there on the software side of the house, right? So basically building systems for portfolio managers, which was super interesting. Great culture. Loved the people there. It was basically like a family. that company back in 2003 was bought out by Lehman Brothers. And I think everyone listening probably knows the famous and infamous Lehman Brothers back in
One thing that would be interesting about that for some of the audience, just to provide them some entertainment, is talk about that Saturday when the call actually came during the collapse. Right.
Oh, that was interesting. So that was back in that was 5 years into our kind of merger. I was playing golf in.
So you had so just to set the stage, right? So you had Neuberger Berman, very extremely well established, prestigious asset management firm on Wall Street, end up getting acquired by one of the most pristine organizations of Wall Street, Lehman Brothers, and then 5 years into this, now you're at the golf course. What's going on?
So I was at the golf course. I believe the name of the golf course was called Hominy Hill Golf Course in Colts Neck, New Jersey. Beautiful, beautiful day. And I start, we were all talking about what was going on in the markets with Bear Stearns having, collapsed. And I'm out there with my Palm Treo back then, because this is before iPhones. I was very proud to be a Palm Treo owner, where I could actually go in and see some cool the cool web pages on my phone. Kept on refreshing the pages, looking for updates. And at the time, I think there were a couple of players involved in terms of purchasing Lehman. So as we were playing, things looked fairly promising. I believe there was a player from Korea involved, as well as Bank of America. So as I refreshed the page throughout the golf game, I see that the Korea bank dropped out. I said, you know what? Still Bank of America would not be a bad deal. I think we still have hopes. Refresh the page. We were probably on the 7th or 8th hole. Refresh the page once again, and it says Bank of America dropped out. So I asked myself, what does that mean? What's going to happen here? 10 minutes later, I've received a phone call from my boss where he's telling me to get my ass into the office as soon as possible, because shit is going down. And that was the start of an incredible ride. I would say a once in a lifetime experience. And Saeed, you were part of it, where we had Neuberger Berman, a company that had been around for 70 years, being part of the biggest collapse in history. So our task was to help Neuberger Berman spin off and survive the Lehman collapse. Basically, we used to call, as you know, Saeed, we used to call ourselves a 70-year-old startup.
That's right.
That was the start of us working. I counted, it was 87 days straight of work. And it was not 87 days straight of, dialing in from home, being on Zoom calls. This was 87 days of going into the office 7 days a week to rescue a company. And how many times can you say that you can have a job where your role is to rescue a company? That never happened. So it was very challenging, very stressful, but also very rewarding. It's something that I'm very proud of. And again, it was, as you know, Saeed, we were a family, a lot of good people. At times it did not seem like work. There was a lot of blood, sweat, and tears, as they say, a lot of laughing. Sometimes a lot of yelling, but we made it. So that was the kind of Neuberger Berman.
For just 1 second there, because you just reminded me of something. I'll be right back. 2 minutes, and I'll be right back.
No worries.
All right. How's this?
Look at that. You have a Neuberger Berman t-shirt.
I've got a Neuberger Berman t-shirt, man. It's I figured, you know what? Since we are talking about family and we are going back down memory lane, why not give a shout out? So we'll give a shout out to
nice
your crew as well.
I wish I had kept some of my stuff. I think I had an umbrella until not long ago, which broke. But
I
that's
remember that umbrella.
Yeah. So, well, yeah, it was good times, man. Looking back on those days makes me smile, because it was surely a special time. In Neuberger and Lehman. So I mean, continuing kind of the story. If you go to 2011, and you probably remember this day because I called you into the office Said. Uh, I told you that I was leaving the company. I had received an offer from Bank of America to join them and help them start a completely new business. The business was called the mass affluent business, which is basically the segment of customers in their space that have over $20,000 in investments and deposits, right? So they wanted someone to come in and be a divisional CIO to build the technology department that focused on that customer segment. So I decided to leave Neuberger Berman. That was a tough decision. Moved my family from the New York tri-state area over to Charlotte, North Carolina, y'all, and the rest was history. So my ride at Bank of America was completely different, right? So I went from being part of an organization that had 2,300 employees to one that had 230,000 employees, and getting shit done at the bank was a completely different endeavor than getting shit done at Neuberger, namely because of the scale. So you had to get very creative in terms of knowing where to influence, where to push. Relationship building was essential. You had to be able to discern and separate people that were loud but not influential. You had to put those aside. Hey, that guy is very opinionated. They're very loud, but ultimately they have no influence. And gravitate towards the folks that had influence in the environment, and build relationships with those folks so that you can move your agenda forward. Yet again, another interesting ride. I was fortunate enough that I was challenged there in a completely new way that I was at Neuberger. I was given a technology portfolio that was $100 million annually, which was probably larger than our technology budget at Neuberger Berman. So it was an interesting ride. I was building digital products that had never been built in banking. One of my first programs out there was building a banking loyalty product that never existed. I ended up, receiving 4 patents as a result, and we developed a rewards product that ended up bringing in over $1 billion worth of revenue for Bank of America. So a super, super awesome ride once again. And over the years at the bank, I ended up getting other roles that were enterprise in nature. At one point, I was head of CRM globally for the bank, which was interesting. It gave me, it got me closer to the customer. So I really had a good sense of how the bank, both in the consumer side as Merrill, how we were serving our customers, had the ability to kind of influence the way we did that in a way that in a way that was pretty cool. So that was B of A. But a couple of years ago, I made the decision to leave the bank and once again do something that I've never done, which is start my own company. Is a dream that I had since I was a kid. Having my own business and fending for myself, as they say. And finally, here was a chance to do that. And Camino Ventures was born, right? So Camino means path or pathway in Spanish. And the premise behind Camino is we want to help financial organizations with their digital journeys. We want to help them drive value by using digital technologies. So as we were talking about a couple days ago, Said, that digital transformation is such a buzzword, and is so every once in a while we get these terms that come about like cloud. At one point it was the cloud, and at some point it was
big data.
What is it?
I said big data, cloud,
big data,
IoT,
right. And tracking the different definitions of it is quite comical, right? So people just overuse the terms, and digital transformation is like that. So we like to say that we help companies drive business value by using digital capabilities versus, hey, we'll come in and help you with your digital transformation. So most people don't know that digital transformations, in reality, those are not technology projects. A digital transformation is a business transformation where the enabler just happens to be technology. So that's the premise behind Camino, and so far it's been good. I mean, we go through the challenges that any early startup goes to, but it's been a good ride so far.
So it's interesting, right? I've had my journey from being entrepreneurial to the corporate world and to being an entrepreneur again. What was when you're in, look, I mean, it's not like you were when you were at B of A, it's not like you were just some coder with your heads down working in a corner on a desk just coding away. You got a pretty high position and with a lot of responsibility, right? $100 million portfolio to manage. That's quite intriguing. It's a lot of responsibility. There's a lot of prestige. There's let's not kid ourselves. The money's not bad either. What prompted in your mind that change to say, you know what, I'm comfortable, but I want to start getting a bit more uncomfortable? What is it that for you did it where you were like, and by the way, you didn't mention another important thing. It's not like you were a young buck with no worries in the world. You had a family with kids, and at that point was when you made that decision. So talk to the audience a little bit about what goes, like, what is it that's so fucked up in that head of ours that we think like this at these given points in time?
It's different incentives. In my view, is different views on what life is, and I don't want to get overly philosophical here or what the purpose of life is, right? So life is not, it's not about the end state. It's not about working in a job and having enough to pay bills and having enough to save and invest and enough for your children, and then calling it a day later when you're older and say, hey, I'm retired and time for the rocking chair and the remote. I don't believe in that. It was kind of like a similar reason as to why I left Neuberger. Neuberger, I was very happy. I had a very senior role. I was one of the most respected leaders in the company, and I decided to make the move. Leaving Bank of America, it has to do with the word comfortable. You mentioned the word comfortable. The word comfortable to me is not necessarily, hey, I'm comfortable, I have arrived, now it's time not to move. I am now comfortable, let me just rest in my laurels, lay back, and I'm staying where I am. When you reach a level of comfort in your profession, it's time where your antennas should pop up and you should start to reflect, right? Because if you're comfortable doing what you're doing, it's time for you to look very closely as to why you're comfortable. And I think life is about discovery. I think it comes down to discovery. I got to a point both at Neuberger and at Bank of America where I was no longer it was no longer adventurous. It was no longer about discovery. It was no longer about the new. It was no longer about, the uncertainty, the challenge. It was like, hey, okay, I'm in, I'm comfortable, I'm good. And that's, to me, in my view, that's not a positive thing. And the adrenaline that comes from embarking in a new challenge in something that I've never done before is always luring to me. It's like, hey, there's that thing that I've never done before. And this goes even beyond career, right? This extends to my personal life as well. I've never done that before. That's interesting. I wonder if I could do it. I wonder if I could prove to myself that I can do it. And that, to me, there's a big rush that comes with that I just can't stand still, and I won't stop until I figure that out. And that's kind of what drove me to leave.
So you're an adrenaline junkie.
I think I am. I think I'm a career and professional adrenaline junkie. That's why I'm kind of writing about to publish my new book. I mean, I never thought that I would be able to write a book. I chose computer science because I wanted a career where I did not have to write a paper that would be graded in college. I hated the subjectivity that's tied to writing. The fact that a professor can look at your paper and it's just his or her opinion as to what grade you get. I did not want to go through that. So I wanted something that was either black or white. Either the question was, and that's why I love math. And that's why I landed in computer science. So here I am, 20 some more years later, writing a book, which is one of the things that I hate the most. But what drove me to writing the book was the fact that I'd never done it before.
So why don't you talk a little bit about that book? And that's I love your I love the title of the book. Why don't you talk a little bit about the book and what the overall where you're seeing the markets shifting? And I think your book talks quite a bit about that. So why don't you talk a little bit about that?
Yeah. So the book is called the $68 trillion tsunami. $68 trillion tsunami. And the book is about the greatest wealth transfer, the greatest intergenerational wealth transfer in history. A transfer of wealth at a level that we've never seen before. Which is when as baby boomers are dying off, that wealth is being transferred from them over to Generation X and millennials, mostly millennials, and the level of disruption that will be triggered by that transfer. And I found it fascinating, right? So it's a topic that I've discussed with business executives, business banking executives, both at Bank of America and outside of it. And it's always been fascinating to me because of the magnitude of the lack of action that companies are not taking to prepare for that. I think a lot of companies, especially in financials, they don't understand the impact that transfer will have on their industry. Big tech does, but companies, industries like banking, and wealth management, and insurance, they don't know. Millennials have a completely new set of experiences as baby boomers do, right? So baby boomers inherited their wealth from the greatest generation, and in terms of the way how they looked at money, the delta wasn't very, very big. The delta between baby boomers, the way baby boomers look at money and millennials look at money, is huge. Baby boomers listen to their parents. I'll give you a few examples. Baby boomers listened to their parents when it came to investing. They listened to their parents when it came to, managing their money. So it was like, hey, Dad, what should I do with my money? Hey, Uncle Jerry, what should I do with my money? And it was like, okay, that's interesting. I'll go do that. I'll talk to this portfolio manager and I'll follow this investment guidelines. That's how baby boomers grew up. Where baby boomers listen to their parents for investment advice, millennials do not. Millennials are a generation of opinionated skeptics. They have supercomputers in their pockets, unlike baby boomers. They lived through the Great Recession. They lived through their parents saying, hey, go to college, get a degree, save your money, and everything is guaranteed to be fine. And you have a population that went to college and they couldn't find the job after they graduated because of the Great Recession. So what was promised to them didn't come true. So they don't trust the stock market. They don't trust investing in the ways their parents did. Where baby boomers were more focused around benchmarks. Hey, I know that my portfolio will grow X percentage over time. Millennials are based their life on life goals. They're more experiential than their parents. Their dreams are not to have, X million dollars in the bank by a certain age. Their dream is to, go around the world or live in Thailand for a month and a half. So there are a lot of companies that are adjusting the way they interact with them in an efficient fashion. Like you've got a couple of banks that are talking about life services and life events with clients so that they can plan for their future better. But you have others that are still banking on no pun intended. They're still banking on things being the same for many years. So
I think you make a really interesting point here, because what's been the gap, right, that you've generally had. So if you take a look at historically, right, most generations, there has not been that wide of a gap as it exists between this generation and the one before, right? So you're saying the boomers and the millennials. And it's very interesting because if you think about it, the technology is a direct contributor to that, because what you have is you have innovation that occurs, and innovation is very transformative, right? and markets tend to change because of it. So if we go back historically, you would see that the innovation that would occur, the kinds of impact that would have, right, to what we call these generational impacts that would be there, these generational technologies or these transformative technologies that would come in, they would occur, these transformations would occur over the course of millennia initially. Then as the market started to evolve, you went from, then that cycle started to shorten because technology is built on top of technology. The foundation is the most difficult thing to lay, and then the process accelerates. Then from there, it went from being over the course of millennia to over the course of centuries. Then as technology started to evolve further and further, these transformational changes started to occur over the course of decades. And up until that point, right, so we go back to, let's say, the 90s, right, and where you would have these transformative changes that would occur over the course of decades. Even within the course of decades, there's these generational changes are happening. So there's not that much change between the previous generation and this generation that you would have to bring them up to speed on. So that the disconnect is not quite as significant. However, when you fast forward to the time where, to us, right, back when we were in high school, even us, we were still, back when we were high school, that was the dawn of the internet. So we can't even, so that was the catalyst that started this accelerated process where in which the changes that were coming were done by orders of magnitude. So what started to happen was between our generation and our parents' generation, there was a massive gap because the way that they were accustomed to doing things had changed greatly. It had changed greatly because the markets had changed greatly. I mean, before you were talking about a great example of that. Today, who would have ever in their wildest imaginations thought that 3 years ago, 4 years ago, people were talking about this thing called Bitcoin, right? Where people were calling it digital gold. And they were like, digital gold? It's a bullshit technology. It doesn't mean anything. You can't touch it. You can't feel it. It's all nonsense. It's going to go away. I can do something that I would, I want to be involved in something that I can touch and feel, right? So traditionally, you take a look at something like the commodities, and even within the commodities, the king of commodities is oil. Fast forward to today, and this black gold, and if you compare this black gold to this digital gold that was supposed to be worthless, today, the black gold, which the world was running on top of, is worth zero, actually negative, versus this digital gold that everyone had written off and said this thing can't even be taken seriously, and all of a sudden that is worth 7,000. So how can our parents, when these kids are, so imagine if you're a kid and you're saying, and your parent said to you, look, invest in this because this is what I'm accustomed to, that's what they've been taught, and all of a sudden from that you go into today, the value of your portfolio is worthless. And if you were the one that had taken them, that brought this to them, and they said, this is bullshit, it's a new thing, it's, it's never going to work because I've never even heard of it. All of a sudden, how would you value that? And same thing about even what's being taught in schools, right? What's being taught in schools is something which is outdated. Most of these professors, they wouldn't be able to tell you what's coming up in the future. What they're teaching you is something that they've been taught years and years and years ago. And by the way, all of this stuff worked in the past. So it's a proven method. However, with the accelerated pace of change that we're having right now, they simply can't keep up with it. So we need to really rethink whether you're an academic, whether you're a banker, whether you're a doctor, right? The adjustment of time, the changes that are happening rapid fire, society itself is not able to keep pace with it. And this is really where when we talk about, my definition at least, when we start talking about this digital transformation, right? So the way that I describe it, there's a digital revolution that's happening right now in the marketplace. And for your organization, forget thrive, just to survive, you're going to have to incorporate this digital transformation. And that's, to me, it's very, very interesting because especially with more established institutes, and this is something that you and I can very easily relate to because we used to spend hours and hours and hours locked into our offices talking about this stuff, which is the cultural change that's required to be able to embrace these changes because there's a lot of resistance within organizations. So In your experience, why don't you talk a little bit about, because I'm sure, especially at some of your previous positions with these more established institutes, the technology piece is the easy piece. The cultural piece, the people piece is the most difficult piece. How do you tackle that?
Yeah, no question. I mean, I think it's the most. First of all, I'd wholeheartedly agree. And not only is it part of the problem or part of the challenge, it's the biggest challenge of all, right? The technology piece is nothing compared to the cultural inhibitors, right? So you've got a lot of companies out there that are used to doing things the old way, right? So one of the things that has come with me starting my own company is that I have the ability to speak to a lot more banking leaders and leaders in the industry than I did before while I was at the bank. And I see a lot. I mean, I see companies that have prioritized technology and have prioritized moving digitally because they see it as survival. And you have companies that they don't know what they don't know. You have I go back to a meeting that I had in Austin with a bank, actually a credit union CEO, and we asked the leader, "Can you tell us a little bit about your 3-year strategy so that we can learn a little bit more about you?" And the CEO basically said, "Oh, we're looking to remodel our branch, and then probably introduce some co-working space into the branch, and probably have someone here that would do the taxes for our workers." And it just blew my mind. It just blew my mind. People do not want to walk into a branch anymore, and there are so many banks that are actually counting on that. They're counting on the fact that people are going to. I don't remember the last time I was in a branch. Right? You've got banks that are actually developing so many digital capabilities on the phone and away from the branch that people don't have to walk into a branch. They only walk into a branch for something that has to do with large transaction like investments or paying off a mortgage. And even that, I think, is going to go away.
100%. There's nothing that frustrates me more than having to go into a bank. And I mean, as a general statement, you've got the larger institutes that allow you to do it, but then there's institutions that that we're banking with that you can't even do a wire online. Man, this blows my mind where I have to come into the branch to do. I don't have time for this. Why am I banking with you?
And I'll add one thing, right? So banks. I like what you mentioned in terms of technology driving exponential change, right? If you look at the history of banking specifically, banks were built to house precious metals thousands of years ago, right? So the first banks in history were temples. When people went from trading, I'll trade you my goat if you give me your cow. I'll give you 2 goats for giving. When people went away from trading in markets to actually trading precious metals for goods and services, they needed a place to store these precious metals. So they picked temples because temples were filled with people that they trusted, and those were the first banks. And over a couple of thousand years, that didn't change much. We needed a brick and mortar. We needed a building with a vault to house our money. Today, that's not. There's the whole notion of you pointing at a branch and saying, "Hey, my money's in a vault there." That's completely disappeared. Your money's just a number in some system somewhere.
It's funny, right? It's funny. People love to whenever I talk to some of the folks, and we have these discussions all the time. People that are more on the traditional side and are ignorant to this. They're like they shit on 2 things. One is they're like, well, what's this? These digital assets, right? These cryptocurrencies. What are they backed by? They're not backed by anything. So my question is simple. I'm like, what is your dollar backed by? Oh, well, it's gold. I'm like, well, what? We moved off of that in the 70s, man.
That's right.
What world are you living in?
That's right.
I mean, and by the way, this came from actual people that are in banking. So to me, it blows my mind that like you don't know the basics of this. And the second thing that they also say is they're like, this blockchain technology, this ledger, all it is you're just putting, you're just crossing off numbers on a digital ledger. I'm like, what do you think banking is today? That's all it is. It's you're checking off credits and debits on ledgers. That's all you're doing. What these technologies are allowed, but except the problem is this: what you're doing is you're doing it in a way where there's multiple parties that are involved, and each party needs to validate that process, which means that there's the more and more number of intermediaries that are introduced, the less efficient a system itself is. So in today's day and age, there should be zero excuse for me to wait on any kind of a settlement, whether it's a security, whether it's currency, whether any form of payment. It should be instantaneous. But our existing technology systems, they simply don't allow it, right? And the reason is because, again, technology is an evolutionary process. And up until now, the technology that we've had at our disposal, it allowed us to get to this stage where at least we're able to handle transactions electronically. Now is that next step where you have these newer and newer technologies that are coming in that allow you to handle them digitally. And there is a difference between doing things that are electronic versus doing things that are digital, right? So the way that I like to define it is that electronic, in my mind, it's electronic, but it's still an analogous process that it goes through.
Mm-hmm.
You have when you have a clock with your traditional clock, and it's powered by a battery, but it's still got the hands on it. It's an analog clock, but it's run electronically, which is perfectly fine. But then you have a digital clock. In that digital clock, that now there is no analog component to it. So you can introduce newer and newer components into it. You can build on top of that. And this is the whole notion of where these newer technologies are going to allow to move forward. And again, it's really, really challenging to understand from the perspective that we're sitting in here on our side, right? Because we came from that side. But the reality was this, and this becomes an interesting notion, right? And this is what I'd like you to sort of a philosophical question. Here's what's happening in banking. The guys that actually get it, what is it that we try to do? We try to make the changes inside the banks. We do it to the best of our abilities, but we hit a ceiling very, very quickly. Very, very quickly is where we hit that ceiling. We face that throughout the course of our career. And then we get to a point where we're just like, fuck it. If they're not going to do it, I'm going to do it. And then we go out and we're creating these newer and newer organizations, and we're building the next phase of what banking is going to be. And we're the ones that end up disrupting. So what would the message be? What would your message be to some of the banking executives that are sitting back and are comfortable and are like, you know what, this change is it's going to happen eventually, but by the time it comes, I'll be long gone, or you know what, it's just hype, it's just bullshit, it's not really going to be there. What would your message be to them? Because clearly, not only have you seen it, but you're part and parcel of it.
I think you have to think about your customers. Right, you have to put your customers first, right? And you have to institute a culture in your organization that puts the customer first, right? So if you're in a company that puts the customer first, you're not going to be satisfied with putting, giving them a customer experience that's just okay, right? You're not going to be satisfied with them looking at their phone and knowing that their banking app is the 100th most easiest to use app on their phone, right? If you're customer centric, you're going to say to yourself, hey, you know what? Jane has Amazon on her phone. Because she has Amazon on her phone, we're going to build an experience that's just as good, if not better than Amazon. So she likes to bank with us and she prefers to bank with us. Like, I got to tell you, the word trust, and the skeptics of digital technology. So the skeptics of today remind me of those folks that were skeptical of being able to put a credit card, online, being able to buy online. I remember like it seemed like every day I would run into somebody that says, hey, I will never, use my credit card to buy something online. That's impossible. I don't trust it. And ultimately, it makes me laugh today, where you have Amazon as one of the largest, if not the largest company in the world, that is built on buying things online. It's all about trust, and trust at the end of the day is just extended credibility and extended reputation. So people over time, once you see that it's a credible solution, people are going to gravitate to it. Like, I laugh when people tell me and say, hey, you will always need a branch. You will always need a brick and mortar, because people, for large transactions and for investments, people are going to want to look at someone eye to eye. No, that's you and I. The same way today, Saeed, you and I may be more nervous about getting in a self-driving vehicle than in a manned vehicle. Our children will probably not trust a manned vehicle. So the level of trust is going to shift away from anything that has human intervention to things that are machine driven. So you're going to see a tipping point where today most people trust something where they know that there's human intervention to the next generation trusting things that are machine driven. And that's going to be remarkable. And you have to, going back to your question, you have to think that way, because the change will happen quickly, right? So Kodak and Blockbuster, and BlackBerry for that matter, they did not see this coming. There are stories about BlackBerry where there were some very junior folks in BlackBerry, raising their hands at leadership and saying and yelling and saying that, hey, the QWERTY keyboard is not enough to be a competitive advantage. We're going to get eaten up if we don't improve our innovation. And there's stories of them not being heard, and BlackBerry resting on the laurels, and where's BlackBerry today? And they had a stronghold on the industry, and they disappeared very quickly. That can happen to your bank. That can happen to your organization. So you've got to wake up. You've got to wake up and do it for your customers. The next generation, and you'll see this on my book, baby boomers were very apprehensive about taking their money from one organization and moving it to another, because they will no longer be able to walk into the branch and see Charlie and say, hey, Charlie, good morning. How are you? Let's drink some coffee. The next generation doesn't give a flying fuck about that. The next generation doesn't want to talk to Charlie. The next generation just wants to know that, hey, your mobile app will be on Saturday morning. I'm not going to name the bank, but I have an account with the 6th largest bank in the country. You can guess if you go online, and their mobile app goes down Saturday mornings. You're the 6th largest banking institution in the country, and your mobile app is down most Saturday mornings. That's not gonna cut it. That's not gonna cut it. And that level of intentionality has to be transmitted to the culture, the bloodline of every single organization that's out there. And leaders have to drive their teams towards that, because what's going to happen too, if you don't act that way, you will not be. There's a domino effect. If you don't act that way, you will not be able to attract talent, right? So if you as a leader don't take that bold stance that you're going to take your organization to the next level, you will never attract talent. You'll have folks coming in. You'll have a revolving door of talent in your organization. If people come in and they know that at the end of the day they just want to survive, that their bank wants to survive, and they're okay with everything, that's just not going to cut it. But we'll see. I think it's interesting what's happening with COVID-19, because a lot of organizations are being exposed, and it's the whole the crossroads, as I may call it, it has come sooner than later for most. So it's going to be an interesting next 12 to 24 months. Gonna be fun.
Yeah, it's funny, right? You were talking about like meeting your teller and seeing the face-to-face. Look, the face-to-face absolutely has value, but what people don't understand is, think about what it is that you and I are doing right now, right? We're face-to-face, but we're face-to-face virtually. We're face-to-face where I'm sitting out here today, locked in during a global pandemic, where we're forced to be locked inside of our own homes. Where I'm sitting out here in New Jersey, and you're thousands of miles out. You're in South Carolina, right?
North Carolina.
North Carolina, yes. Okay, so hundreds of miles out, not thousands. But nevertheless, look, I mean, it feels like it feels like we're face to face with each other. So this technology enables you to be able to do these kinds of things, and this is what breeds innovation. I mean, who would have thought that you and I have been talking about doing some sort of a or having a discussion like this and putting it onto the public, but who'd have thought that we'd be able to do it on using a free software, right? Where again, all of these things before, it wasn't possible. If let's go back to let's say a decade ago, right? To be able to do something like this is a massive investment that we would have had to put, or at least if not a massive, at least a significant investment that we would have.
It would have been nearly impossible because you wouldn't have the infrastructure to have this level of quality of video coming through. It would have been.
I'm not even talking about video. I'm not even talking about video. Good luck with video. I'm talking about even if we were to do it face to face, right? So if we had to do that, what would we have to do? We would have had to rent a studio. We would have to gotten professional cameras. Then we would have had to gotten this edited and then put out. That's a lot. That's a lot of time. That's a lot of money versus doing something like this, which is as simple as me picking up the phone and going, "Hey man, what's going on?" "Oh, nothing much, man. I'm just having a cup of coffee." "All right, cool. Let's why don't you come on this app? I'll send you a link to it. I texted you the link. All of a sudden we're on and we're having this conversation and the entire world gets to hear it."
It's interesting that you mentioned that because that's part of what makes me excited about entrepreneurship, the future of entrepreneurship. If you think about what is required to start a business and run a business today, we've given that access, that ability to start a business to the masses, right? So if you go back years ago, people, talk about once you incorporate having to, get a data center and stand up servers and, hire an IT team and figure out how you're going to get your software out there. And
you just took me back. You said data centers and holy shit, at a moment I just went back. I'm like, data centers? Oh my God. They were a thing, but I'm saying they were a thing. But what's crazy is that for a lot of institutes today, they are a thing. That's their fucking business. If you take the data center away, there's no business. That's crazy.
So that same bank in Austin that I told you about they had a server rack in a closet in the back of their branch, with wires sticking out everywhere, and which was like taking a time machine, to the early 2000s. But anybody today can start a bank, right? So once you go through the red tape of getting your certifications and your approvals, in terms of getting the infrastructure to start a bank, that's possible. So the reason why I'm excited about entrepreneurship is that the number of people that have the ability to start a business has gone up exponentially, and I just think that the amount of things that are going to be put out there for customers are going to be fascinating, right? So these old school organizations, they are in trouble. A few years ago, if you were a bank, all you had to do is look left, look right, and take a look at your competitors and not worry about anyone else. Now you've got to look across multiple industries, right? Because if your app doesn't behave like Uber, if your app doesn't behave like Uber, it's not as reliable as Amazon, they're taking their money and they're leaving, right? People are taking their money and they're going to leave your bank. The quality of the coffee you serve in the branch is not going to make them stay. They're going to leave, and people have to act with that level of conviction.
It's funny you mentioned that because when you talk about banking, there used to be a time where if you said, "Look, I want to go out there and I want to start my own bank," people are like, "Whoa, that's this guy's a tycoon, right? He's going to go out there and start his own bank." It's funny, when we were launching Liquidity, people came to us once we explained to them what it is that we're doing, and they said, "Oh, so you guys are launching you guys are building a digital investment bank. That's where you're going." And my response to that is, "Fuck that, man. Investment banking is not a scalable model. Scalability. Who would have ever thought that you would have applied the concept of scalability, which is generally applied with technology, to banking?"
Mm-hmm.
So we were like, no, man, don't associate that to us. It sounds cool. Initially, I was all over it. I'm like, yeah, cool, a digital investment bank. But then when we started thinking more and more about it, we're like, man, wait, hold on, that's not scalable.
You're basically attaching the digital word to an old term.
That's right.
It's where in reality the whole thing is being transformed.
That's right. So what we said was, we said, no, we're not building a digital investment bank. We're building a digital investment banking platform that's going to change the dynamics of how this entire industry overall works. So instead of building one bank, we're going to build a platform in which there's multiple banks, the existing ones, and that connect and integrate with one another. And that's the future. That's the future where things are going. Because if you take a look at how this process works, right, the use cases within the investment banking world today, it's fragmented. It's an extremely fragmented process. And these investment banks, they sit on their own islands, and everyone is very, very protective of it. But
it's called IBAS, investment banking as a service.
we call it. It's all these funny terms. We call it DSaaS, digital securities as a service.
Digital securities, DSaaS. That's right. I like that.
So look, these are the fascinating things about this newer and newer technology as it's coming out, and it's truly changing the face of how things work, right? So if you think about Internet 1.0, right, which is when the in the 90s, right, when this started to come out and where we got our start from, then you start thinking about the cloud and big data and all this, which caused a revolution in terms of social media and how all the changes that came about with it. Now is where we go. So I call that Internet 2.0, and then Internet 3.0 now with blockchain and digital ledger technologies that are coming in. And so what I say is the example or the analogy that I give is that with Internet 1.0, when that came in, you had these people that were these established companies that were very, very comfortable, right? Extremely comfortable, said, it's going to happen. And when it happens, we'll worry about it then. Internet 1.0 came in and it disrupted companies. Then Internet 2.0 came in, and Internet 2.0 disrupted industries. And now with Internet 3.0, that's going to disrupt economies. And I'm telling you this, for anyone who is involved in regulation, look, regulation is great. We need regulation. We're all about regulation, right? But we need to accelerate our process. We need to do this a lot quicker.
That's the pace of policymaking in the regulatory landscape is just lagging. I mean, you see it with the digital currency work that you do in blockchain. I see it a lot with AI, right? So AI, I see policymakers trying to keep up with AI and develop regulation, and the technology is moving exponentially faster than people can catch up to, right? So it's interesting. We're not built for regulatory bodies to move at the pace that the technology is moving right now.
Or we need to really think about what the future regulator or the future legislators are going to look like, right? So if you take a look at the future bankers of the world, right, before, what did the future bankers look like? And you and I, we joke about it, right? The future bankers would be 3-piece suit coming in. there's a very, very specific look, and they would talk a certain way. Now the future bankers are guys that I wouldn't say they're in their flip flops, but the tie, gone is a tie, gone is a 3-piece, right? And they're guys, by the way, that are not just because before what you had guys that were financially savvy and that's all they were. But when it came to technology, they had someone backing them. The future banker now is someone who comes from both sides, right? So it's no longer just someone who's a financial guy and who's a technology guy, but the two merge together in what we call fintech. We're the fintech guys. We're the future bankers. That's what we're doing. So similar to that, what you're going to have is you're going to have regulation and you're going to have technology come together in what's known as reg tech. And the future regulators are going to be these guys that understand it. And by the way, as much as a lot of we may want to shit on the government and their slow processes and whatnot, and which, by the way, they are. We have to give credit where credit is due. Where you are seeing some of these guys start to come out who are thinking about, who understand technology and who are actually embracing technology. But again, that's great. but you know what?
There's an inevitability to that, right? So it's inevitable for banks and for governments to have to adapt to that because the world is changing, right? So, whether they like it or not, they're going to have to, just like everybody else, they're going to have to adapt, right? So you're going to see a lot of change in government as well.
100%, 100%. Remember, if you go back to what I was talking about, the disruption of companies to industries, right? If you take a look at Netflix, right? Netflix didn't wait for Blockbuster to change their business model or give them an opportunity. What did they were working in parallel. They were continuing to build. Blockbuster was resting on its laurels, comes in. Who knows Blockbuster today, right? There's a story that people, there's case studies that are done on them about what not to do in business, right?
Yeah.
Similar to that, while for big government like ours, as we're looking to understand how the process works and whatnot, there's smaller countries out there that are embracing the technological revolutions and innovators. You are not, I guarantee you that you cannot stop innovation. You will never be able to stop innovation. Innovation will always figure a way out. If they can't do it here, they'll figure out somewhere else. And the beauty of this country has been that we've always embraced innovation, right? And we've been quick to change it. Now we're in a very, very unique situation where we're not as quick. And I have to warn, I have to put a warning out there to people and let the government know, guys, pick up your fucking slack. You need to.
Going back to the word comfortable, I think comfort is a problem, right? So you mentioned Blockbuster, Kodak. People think that the digital camera was invented, and Kodak could not keep up, right? What people don't know, most people don't know, is that Kodak actually had a digital camera product, right? That's Kodak right. At some point had a digital camera product that they had launched, but they chose not to invest on their digital camera product because their traditional film side of the business was doing so well. So they consciously neglected the future, and they neglected innovation for the sake of their traditional film side of the business, which is interesting. And I think everyone's got to be looking out for those Kodak Blockbuster stories inside their companies, right? Because the same way you have, pockets of innovation and pockets of startup cultures in your company, you also have pockets of Blockbusters and pockets of Kodaks happening. And as a leader, it's your responsibility to be looking out for where there is stagnation across your company.
That's a great point. And I'm looking at the time. I can't. We had originally this thing slotted for a half hour. We're already over the hour mark. So this is crazy. It doesn't even feel like it. I got to have you back on, man. You and I need to continue this discussion. I think there's so much more that we need to continue talking about. But before you leave, I guess for those that come from the financial markets, within the capital markets, what are some of the innovations that you're seeing within there, and where are you seeing the focus should be for these for some of these organizations to be more forward thinking and embracing technology?
I think that's an interesting question, right? And there's a lot in there. I think people have to rethink their organizations completely from the ground up, right? I think people have to, not only develop a vision of what the right way of going about the future is, but also develop a culture that is kind of like a lean startup culture, a culture of constant innovation, a culture of constant iteration, right? So it's not. I think a company can't just basically say, hey, here's our 3-year view. We want to be there in 3 years. That's necessary, but you also have to take into account massive iteration through those 3 years. That's what is being done very successful at companies like Apple, companies like Amazon, right? They're able to adapt very quickly. They're able to test ideas very quickly. They understand talent. They understand the importance of talent. So organizations have to do that, right? And they have to become technology companies across the board. You have to be a technology company. I laughed when the first time I heard our CEO call us a technology company. Like, you're just talking out of your ass, right? Like, that's like, you're just saying that to get it. This is the IT department. We're tech and ops. So you're saying that to rile us up. When in reality, fast forward 8 years later, I understand why she did that. We're ultimately a technology company. And you have a lot of organizations that still see technology as IT. Oh, that's IT. Oh yeah, that's IT. It's that expense. That's IT. When reality is all intertwined.
What I say to that, right? Similar to what you were saying, I tell this to people all the time that every business that's out there today is in the business of technology. And for anyone who thinks that they're not in the business of technology, they're going to be out of business completely.
Without a doubt. There's never been a time that's easier for you to switch providers than it is today. I don't care what industry it is. If you don't like the way you're served, you're going to get your shit and find someone else that can do it better. And there's never been a time where that's easier for customers than today.
Awesome, man. Good stuff. Ilich, this has been fantastic. Thanks again. Where can people follow you? Where can they find you?
Yeah, so I'm in LinkedIn. So look for Ilich Martinez. There's most likely only one Ilich Martinez.
There's only one handsome face like that.
Like there's only one Saeed Hussein. There's only one. Look for me in LinkedIn, Ilich Martinez. I'm also on Instagram as well. Follow me. I try to put some good content out there quite often. So shoot me a note and we can connect.
Awesome. Ilich, again, thank you very much, guys. This was Ilich Martinez, founder and CEO of Camino Ventures. I've been your host, Saeed Hussein. Thank you very much again for joining. And I apologize for this thing going over the hour, but fuck it. It was worth it. Thanks.
Take care, Saeed. See you. Thanks, everybody.